Hello ladies and gentlemen, Greg McCloskey from ForexLive.com. This is the Kickstart video. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. Today's day is October 10th, 2024. We just had some US data. Let's talk about it and talk about the charts. The CPI data came in higher than expectations, with the headline coming in at 0.2% and the core coming in at 0.3%. Kind of offsetting that was the initial jobless claims, which surged to 258. They're expecting 230K, and that was the highest level going back years for that measure. There weren't any notes about things like the storm effect or the strike effect, and the initial claims changes by state didn't necessarily reflect those states impacted by the storm or the strike. So it's a bit concerning, and that has things like yields moving lower right now. We have the 10-year yield down minus 0.6 basis points, the 2-year yield down close to 6 basis points currently at the moment. We do have a 30-year bond auction later on this afternoon, and it is currently up 1.9 basis points. We have the stock market moving lower, but off of their lowest levels as well, with the NASDAQ index, last I looked, down 80 points. It was down over 100 points at one point. The S&P is down around 19 points. It was down around minus 23 points at the lows. So with that all said, let's take a look at what the U.S. dollar is doing. And we'll start by taking a look at the euro versus U.S. dollar on the 4-hour chart. And you can see the volatility on this 4-hour bar here. The dollar went lower here. I think that was off the U.S. jobless claims data, and it spiking to the upside, and we moved up down to test this swing area through here. It's kind of messy swing area, but between 1.09 and 1.09126, price moved into that level and then bounced higher. We are now back above the 100-day moving average. That it was a key barometer for trading often. And before the data, the price did move did move below that 100-day moving average and stayed below this swing area in trading here today. Since then, we've seen the rotation back to the upside off of the rebound here, and we've have traded above this swing area. So this area right through here is going to be key for the bias in trading in this currency pair, not only today but going forward. If we start to move back above the 1.0949 level, I could see more upside momentum as the market corrects on the failed break below the 100-day moving average. Conversely, it'll take a move below the 100-day moving average to get the bias moving back more in this direction. That is for sure here, and we're currently trading at 1.0947. thereabouts. So we are moving a little bit, maybe it's a 4.3. So we're moving a little bit away from that 100-day moving average right now. So the buyers are trying to make a play in the euro versus US dollar. Look for a break again of the 1.0949 to open the door for further upside momentum. Let's take a look at the dollar versus yen next, and again we'll focus on the hourly chart. And the price highs in trading here today off this 4-hour chart, we're able to get a little bit above these highs going back to mid-August. That level came in at 149.36, and the high price came in at 149.55. And the price has since rotated to the downside. We are seeing a lower bias here in the dollar versus yen after that data. But what we haven't done is move back below the 38.2% retracement. That 38.2% retracement comes at 148.116, and the level also corresponds roughly with swing highs that came in here and here and maybe here. It's sort of the middle point of moves at a ceiling right here. Maybe moved a little bit above it here before moving to the downside. So in trading earlier this week, the price did move below that 38.2% retracement, but did find support buyers right against this old ceiling here. You can see the number of different highs that we came in against that level right here, right here, right here, right here, right here, broke above it, and then tested the level in trading yesterday. That was key to this move to the upside. So these are the support targets on the downside for the dollar versus yen. If we start to break back below the 38.2% retracement, this level is key at 147.33-ish type area. So be aware, be prepared for that. If we do bounce off of this level, then the battle is up between this level up here and the 38.2% retracement, maybe up to 55 as well. Finally, let's take a look at the sterling versus US dollar. And on the 4-hour chart, we did see a break below the 50% retracement level on the dollar buying here, but we are since rotated back to the upside as yields move back to the downside, and we're back above that 50%. That's 50% of this move to the upside from this August low to the high price that we saw in the month of September. Watch that level as the bias defining level, the risk defining level for traders. The low price that we saw in trading here today did stall near the low price from going back here to early September. I guess that's a September low. So we found support buyers against that level, push for the upside. But the 50% retracement level is going to be key for this pair. That level not only corresponds with that level, but also if you go back in time to different highs through here, they came in near that 50%, and then we broke above that level and used that level as a lower here. We broke below it here, but then based and moved higher. We tried to hold it through here this week and then broke below it. So 50% retracement is going to be key for traders in the sterling versus US dollar. As long as we can stay above that level, the bias is a little bit more to the upside. So there you have it, a look at the three major currency pairs. Just kickstart your day. My name is Greg McCloskey. Good fortune through trading. Bye-bye now.